Good morning and welcome back to Almus Market Mornings. There were two major events that has taken place today. First, the MoU between Iran and US has been electronically signed between the leaders of the two countries. This brings a lot of relief and an end to the challenges faced by the regions, at least temporarily. The FOMC yesterday kept the rates unchanged in their meeting, but it was an interesting one because now the Fed is under new leadership and Kevin Warsh does mark a significant change from the demeanor of Jerome Powell. To start off with, he made it clear that the Fed will deliver on price stability, but at the same time, he's been critical of the use of forward guidance. The statement was also shorter than usual, and all in all, it seems Chair Wash will shake up the communication strategy. Let's get all this debrief from JK. Good morning, sir. A significant day with the peace deal signed. This is the most solid step taken towards peace. Your 2 cents on both the events.
Good morning, Swaraj. Yeah, definitely. Finally, market wanted to see the MOU that has been talked about from the beginning of the week to be put in writing and then signed. Signed document is a more reliable source for the market to, take its uh, approach, and definitely that has been done now. And obviously, it is paving the way for more harder negotiations on key issues in the next 60 days, which of course might be extended as well. Importantly, even Iran's side has also signed this agreement. And the market's main relief comes from the fact that over the next 30 days, the Strait of Hormuz will be open for normal shipment, as it was before the war started. And that is why we have seen the oil prices come off more than 10% in the last 2 to 3 days. And although other markets have not reacted too much to this fall in the oil price, though one should say that if you look at the US markets as well, they were never falling even when the oil price was rising. And it was only in the yields that we had seen a spike up above key levels, and those have also moderated. Yes, all said, it's a good development. There'll be possibly less headlines on the attacks or any sort of tensions, because we are entering into a period of negotiation where both the parties have agreed to stop any sort of attacks. The only hitch would be the actions by Israel and the militant outfits in Lebanon supported by Iran. So hopefully those factions also remain somewhat subdued. So it's a good development. Yes, I think my focus is more on what the Fed did or did not do. In the meeting yesterday, and I mean, if you look at, we had a new chairman yesterday, Kevin Warsh, and I have seen some changes over the period. The previous new incumbents, though had some different approaches and some were for continuity, but at least they were clearly stating their views, which Kevin Warsh totally avoided. That stands out. He came across as a person who gives very little away to the markets. Only thing he was communicating clearly was that he wanted many changes, but that he will go about it methodically and in a time-bound manner. Throughout the press conference, he appeared focused on conveying collective views of the committee rather than offering any of his own personal guidance. The most striking change was, of course, in the communication strategy itself. And the policy statement, which used to be quite detailed one, has now become a very short document, stripping out almost all the forward guidance and much of the contextual languages as well. And yes, he repeatedly pointed to two things: that Fed will deliver on its mandate, and the committee will meet again in 6 weeks. So these are the 2 points which I heard very frequently from him. So Wall Street's interpretation is that Warsh is preparing to reshape the Fed's operating framework over a period of time, and not just a not just set interest rates. And of course, the changes he is envisaging, he is going to go about it, by setting up task forces on various review of the way Fed operates, be it the forward guidance or the inflation assessment. All these will, be worked on by the task forces which he has set up, and the report of the task force will be, available by the end of this year, according to the Fed new chairman. If you look at the dot plot itself, actually, the rate decision itself was unanimous. It was the dot plot showed a split down the line, and 9 of the participants wanted at least one rate hike, and it actually painted a much hawkish picture than the headline rate decision suggested. One policymaker actually forecast 3 quarter point hikes over the next 6 months. 5 members expected 2 hikes, while 3 members saw just one hike. Of course, these projections could change significantly if oil prices retreat more and inflation pressures ease. And the Fed's updated projection also show PC inflation at 3.3%, versus 2.6% that was projected earlier. So they are forecasting inflation to remain above target rate for years. And the target rate of 2% will be seen only in 2028. So what is becoming a very contradictory action is that the Fed is becoming, continuing to describe price stability as a primary objective, but simultaneously higher inflation projection is not leading to an action. Some people are even questioning, if you are upping the PCE inflation forecast by so much, why they didn't act yesterday? I mean, no, and it's not as though it has been rising just now. It has been rising. It has been above the target rate for 3 years, and it's going to be there for some more time. So I think that is something that is definitely questionable. Market reactions. They sold off bonds across the curve, particularly in the near term. The 2-year was, of course, the most hit with a jump of 16 basis points. 5-year yields rose about 12 basis points. Longer dated bonds were relatively stable, but still the yields moved somewhat higher. The dollar took it on the chin. We once again went near 100.50, slightly below that now. Euro was the big casualty, falling nearly 1%. And then the yen, he's now trading above the level where BOJ massively intervened earlier. We are at 160.60. Now, maybe BOJ will keep off because this is happening along with a broader dollar uptrend. And therefore, they don't see a need to intervene right now, having already spent massive amount in the earlier case. It's only if yen alone weakens with the dollar, also remaining weak, that's when they will probably act. And so I think this dollar strength, of course, is also still within the overall range that we have seen. Unless we see dollar index break 101, I'm not getting too bullish on the dollar. It's not that, the dot plots, for example, last time they indicated one rate cut this year. Now that has changed into at least one rate hike this year. So these keeps changing, and therefore market's initial reaction might also be reversed in the coming days. Yes, I think market has a lot to chew. We'll have to see whether outside of the Fed meeting, Kevin Warsh makes some statements on the policy, but looking at his personality, I think he's a person who is going to give very little away. On the economy side, you had US retail sales that came very strong, both on the headline as well as on the control group. Again, reiterating that the economy is strong and does not warrant a rate cut. UK inflation, on the other side, fell, more than expected. Rather, it fell from the previous month as well as below the forecast. And therefore, it reinforces the need to hold the rates unchanged. So overall, I think we are almost done with the major policy decisions of the central banks, and the way is clear for the market to set its own direction, or perhaps not getting too much from the central banks. I think the dollar may still continue to hover in the recent ranges. As for the rupee, we saw a new cycle low for the dollar, below 94.30, but then it has bounced very strongly with good import demands surfacing, particularly the oil companies. And it is slightly surprising that even oil has fallen to 5% twice in the last 3 days, and that shows that the market is not really positioning itself short for a fall in anticipation of the flows, but only sells when there is actually flows seen. So the demand side actually is also pushing up. Of course, with the dollar rally overnight, we are now seeing the dollar rupees trading closer to 94.70, and might as well see some more upside, but that will actually invite selling from the real flows. So overall stability in the rupee continuing, but global markets, I'm still on the watch. Thank you.
Thank you, JK. And yes, with the new Fed chair, I think the entire concept we have been learning or getting, which is forward guidance, that has been put into questions because all the statement interpretation or interpretation of what the chairman himself says, all of that, which a lot of these analysts used to do, I think that strategy needs a changing because Kevin Warsh seems like a different ball game. It's one thing is clear that uh, they are changing some sort of a communication strategy. There would be some more major changes which are in order, but he says he is going to be methodical with that. Otherwise, rate decision was unanimous. One interesting point, which I think food for thought, which I would pick from what JK has said, is that if the general expectation, looking at the dot plot, is that the inflation is going to rise so much and maybe come to the target in a few years' time only, then why not raise now? Why not raise the rates now? I think that's a good food for thought to sort of end the podcast with, because that's the contradictions of the world. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh out of updates.